Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, my name is Aaron Edwards. It is July 9th, 2025. Corn market and the bean market also, but especially the corn market is taking a bad hit this week. Let's go over markets, but before we do that, let's jump into the recommendation. We always want to start to the call to action. And these recommendations may seem a bit surprising, but bear with me, follow the train of thought, and we'll get to the thought process behind it. So we're going to sell, let me mark that box, sell 25% of quarter three corn and sell 20% of new crop corn. Like I said, I know that might be a tough pill to swallow right now, but bear with me. I want you to understand the thought process. So in order to jump into that, let me go ahead and share this other screen here. I want to just, as an anecdote, before we really get into the analysis of this week, I want to start with 2020. Let me get a marker here. I think I want black for this. Black works. Pull that to the side. So there are no 2 years are the same. So everything that I'm going to say here, take with the understanding that no 2 years are the same, and we don't have to have a repeat. But I did want to point out a few interesting points. So first of all, let me circle here. This is 2020. What are some similarities? Well, number one, there was COVID, but beyond that, we were in the middle of a trade war, and there was pretty significant economic uncertainty. Markets were wonky is another way to think about it. What happened to the corn market in 2020? We got a February high, which sound familiar, right? We had that this year. That is unusual, right? For the high to come in February is unusual. Then during the springtime, we had a tiny little opportunity maybe as part of a fall in April, but during springtime, we did not get a rally, unless you want to call this a rally, but that's a hard press to call that a rally. We didn't get a move up close to these highs or we didn't get anything friendly in the spring. Got a little pop in July, short-lived, came right back to the lows. And then what happened? If you just look big picture at 2020, had a small opportunity in February, really nothing during the growing season. I mean, if you want to call this a rally or call this a rally, but it pales in comparison to this. I'm not saying we're going into bull markets. I'm not saying that's bull markets are here and that's, we're off to the races. That's not what I'm saying. I don't want you to take this as excessively bullish. But there is an important takeaway, in my opinion, that is when you don't get this seasonal opportunity to sell, or when these seasonal opportunities to sell aren't very good, eventually you can just kind of wear the farmer down. He sells the grain, and then not right all at once, but you do have the potential for that recovery after harvest. And when that recovery after harvest comes, which it usually does, if a lot of grain has traded hands at low price levels in a hopeless environment where there's nothing else that can be done, when that happens, there isn't necessarily the selling pressure that you would expect in normal years. So the reason I wanted to show this is because I do want us to be mindful of in this hopeless environment. Maybe you're selling here, maybe you're selling here, maybe you're selling here, maybe you're selling here. In this hopeless environment of low prices during the growing season, plenty of corn, what's going to ever change? As corn trades hands, eventually what happens is that corn is moved. We don't have that selling pressure on top of it. And then farmers feel like they need a higher and higher price to ever be able to average out those bad sales. And the reason I just wanted to put this into perspective is because we need to be mindful of the risks. And the biggest risk in 2020 was not having some participation in reownership. Now, on that note, we should reown now. We should reown now. We should reown now. You weren't late on reownership. Really, even in October, you weren't late, right? But you could jump in at harvest, anytime at harvest, and it was just fine. You didn't need to get it right in the middle of July. So seasonally, we still have a lot of selling pressure over these markets. I just wanted to show that for perspective, because I think a lot of the rest of the video will make sense from that anecdote, right? Now, no 2 years are the same, but let's go with that. And again, market plan portfolio, then we look at the seasonals, the funds, the technicals, and then to the action plan. So shut this down, and then let me pull up or go over the corn market. Corn market, it just, week after week, it's like the news just keeps getting worse on corn, right? It feels like it just goes from bad to worse. Let's pick a color, red. There we go, red. We'll make bad news. Let's call it a red bloodbath if we want to. So the spec funds just keep selling. That's the really bad news. How low can they go? They could go down here. In my opinion, we could see that. So are spec funds oversold? Yes. Can they sell more? Yes. How do we know when they're stopped? Well, we never really will, but seasonally, this is a tricky time where if you still have most of the corn left that needs to go through the silking phase, but you have rains forecasted, if those rains don't come, maybe we get a pop. If we do get those rains, probably it stays pressured. So it's just kind of that tricky time. And this is what I really want to zero in on. I'm actually going to talk about basis first, and then we'll talk about futures, because this is important in my opinion. Let's get green, maybe a little bit more hopeful. So if you just look at this chart, and this location is Tippecanoe County, West Lafayette. Basis levels, okay. So the exact price of basis is location specific. The general trends tend to be fairly similar across the Corn Belt. So this is a specific county, Tippecanoe County, Houma, Purdue, Lafayette, whatnot. But the trends are very similar across regions. So here's what I wanted to show. Just in July, historically speaking, if you look at historic averages, July is basically the best time for basis historically. August is second best. It's still pretty good historically for basis. But July is historically the best time for basis. So if you want to think of, here's Chicago, and then basis is, oh, it's way down here, or it got up here, or, oh, I got positive basis. Okay, great. So basis is in relation to the price in Chicago. That price is the closest, or if it's positive, it's the most positive. It's the best basis level you're probably going to have throughout the year. So just taking two steps back and not focusing on flat cash prices, the best relationship between Chicago and your cash price very likely is over the next few weeks. So when do you want to sell cash grain? When you have the best relationship between Chicago and your when you have the best basis from a theoretical standpoint, that's when you want to sell cash grain. So it's very hard to say, my goodness, corn is plummeting, it's going lower, and now Aaron's saying sell. Well, don't think about it as flat cash prices. Think about it as, let's make a sale on the cash market when grain is dear. And then at some point in time, we're going to have to say, I still want exposure in Chicago, right? So that's the thought process behind sales at this point. And then you would say, okay, Aaron, but you're saying to sell new crop as well, and new crop is very bad. Well, think about it this way. Where is new crop going? New crop is probably going to, again, basis levels are specific, but new crop is probably going to, if we look at historic averages, in this scenario, I would say there's a decent shot that new crop is going to be somewhere between, say, 20 and 45 in Tippecanoe County once grain starts moving across the scale. So if you want to call it, negative 35, negative 40, pick a number. We don't exactly know what it'll be. But if your new crop basis is minus 20 or even minus 30, I think there's a decent shot that you would be better off locking in the basis now, unless your new crop basis is something like negative 40 at this comparison, right? So if you think about your historic basis levels, if your new crop basis level is at or above what it is historically with a monster corn crop, it's probably better to lock in that cash sale or an HTA, right? Or sorry, a basis contract. Let me make that very clear. On new crop, if you're not ready to I can't stand to outright price it, but if your basis is strong, the chances that your basis in July will be stronger than your basis at harvest in most locations is very good. We don't know what basis will be at harvest. That's a future decision. But it is a solid decision to say, let me lock in this basis. So maybe I should have just made the recommendation instead of sell 20% of corn to say write a basis contract on 20% of corn. But the reason I didn't is because I actually think we might see futures more pressured down. So by just making the sale, if corn keeps going down and then you can re-own down here, that actually is technically better than writing the basis contract, watching it don't go down and watching it go up, right? So, but if you don't, I'm not going to use a hedge account, I'm not going to do that, then basis contract would be the second best. But that's the thought process is, let's lock in basis, let's move physical grain when physical grain is dear. Let's move cash, let's move the actual bushels when those are dear, even though Chicago is very, very bad. To talk about how bad Chicago is, the price in Chicago, let me get a marker for this here. Maybe we'll do blue. Well, if we're going to keep on the bloodbath analogy, we'll just go with red again. This is the nearby contract, so this is not contract by contract. It's just whatever contract was closest to expiring. We still aren't quite at harvest lows from last year would be way down in here, and we all know that all too well. So is corn done falling? I'm not sure it is, and I'm not even sure we'll stop at last year's harvest lows. Hopefully, Hopefully this year's harvest lows aren't as low as last year, but we don't have a guarantee of that. That's not something I would write in stone and say you're not done falling. So again, this could work its way down. So the idea of selling corn now is like, okay, basis is good. Let me lock this in. If it comes down in this area, then maybe we re-own it and we can, move up from there, and the wash of it all comes to fruition. So, or comes, we get good results from it. So that's the thought process on the corn. Not a good situation, not a situation we want to be in. But again, it's making the best decision with what we have right now. And that's where we're at. Let's shift gears. We'll go to soybeans. And let me get a marker here. I'm gonna go with blue. A little more hopeful on the beans. Nothing to write home about, but a little bit better. Okay, here we go on the beans. So the soybean market, the speculators are actually still long. They still, I don't know if they still will be when the next Friday's report comes out, but as of now, they're still long. And they really haven't had a huge short position on soybeans really since, the real big ones were only like last fall, right? So not had a huge sold position for quite some time. And that's optimistic. Again, I'm not sure I would hold my breath, and we'll go over it real quick. Basis, I'm going to go over basis a little bit faster because I explained some of the thought process in the other image. The main difference I wanted to say between the corn basis and the soybean basis is we kind of got that the July highs in corn, but we have historically speaking, a lot of times August actually gives us, so just to make sure we're understanding it, this is the calendar, then these are the contract months. So, right, it's kind of forward looking, but this is the time of the calendar that it happens. A lot of times August actually still gives us good basis levels. So that's why there's no recommendation on the soybeans just yet. We've locked in, if you follow the recommendations, we've locked in some hedges, which is this chart. Let me get black here. We'll go with black. If you follow, this is the September contract. If you're looking at quarter three soybean sales, we've locked in the hedges here, right, at 1040. But I'm not quite ready to lock in the cash sales because if this continues to fall, chances are that basis would continue to improve. And historically speaking, it might even improve all the way into August. So if we're going to get another 10, 20, 30 cents out of basis, if we're going to get something real friendly out of basis, and if the market's going to be pressured, whether markets stay stopped and basis goes up, or cash markets stay flat but futures go down, there's a decent chance that sold position in soybeans will still improve. So we're not too antsy to move that last little bit of old crop, assuming that you've got those hedges in place. Just hold that for now, and it's in our odds are in our favor to be patient on cash sales on beans. So that's what we're going to do with the quarter three bean bushels, and we've done good work on the new crop bean sales. So nothing to do there from a recommendation standpoint. All right, wrapping that up. Now let's go back to the summary, and we will go from there. Seasonally, it is neutral for corn, and seasonally, it is neutral for beans. If you look at average prices, July and August go down. They move towards harvest lows. Those average prices are deceptive because July and August, they actually have all of the upside potential, but also a lot of the downside risk. So July and August are just typically very volatile months. You might get great prices. You might be close to harvest lows. And so it's just very tricky from a seasonality standpoint. Managed money, speculators, they have sold enough corn to where it actually would justify a buy. They're actually oversold on corn. the problem is they're oversold, but seasonally it's still a little tricky. So I don't think we're missing out on a ton by just kicking the can down the road instead of trying to catch a falling knife. Let's just, if they're going to sell more, let's let them, throw their tantrum, sell a little more. Let's let them, get it out of their system. Hopefully catch it on the swing on the way up instead of trying to catch a falling knife and pick the bottom, so to speak. But we already have a green light from a speculator's standpoint. They're oversold. Speculators have been oversold for some time. That continues. So in the June report, we had sell seasonally, buy funds, downtrend, uptrend. It's been mixed bag. We're gradually getting consolidation. So we've lost the seasonality. We still have that buy green light. So we're getting consensus, if you want to think about it that way. We're gradually getting consensus towards a buy on corn, but we're not there yet. The speculators are still long in the soybean market, but not enough to justify any indicator. So it's technically neutral. Corn is in a downtrend. Soybeans are in a downtrend. It's not a good situation. Historically speaking, corn basis tends to peak in July. Recommendations on cash sales or basis contracts are tied to this strong basis seasonally. Historically, soybean basis tends to peak a little later than corn basis. So we are not in as big of a hurry to sell soybeans in the cash market. When markets reopened after the 4th of July, there was a gap left in the charts. In trader language, gaps get filled. I am not convinced that we are at harvest lows yet. We are likely due for a bumpy ride over the next few weeks. Technicals are weak on both corn and soybeans for now. Wish I had better news. Wish we had great prices. That would be wonderful. It's not the case now. Markets change. The headlines that are flashing across. So you say, hey, $3 corn in Brazil, piles of corn open, outside of bins in Brazil. And yes, there is plenty of corn in Brazil. There's a lot of old crop in the U.S. and there's not nearly as enough new crop sold in the U.S. as there should be. There is a lot of selling pressure, especially in the corn market for now. a lot of that selling pressure probably will be gone 2 and 3 months from now. In Brazil, before the rainy season starts, usually in September, October, those piles need to be cleared out. So something needs to be done with it, or get a tarp over it and lose, that's a mess. But the rainy season is not far from starting. So that a lot of farmers in Brazil are hand to mouth from a cash standpoint. So they'll need to sell for cash. A lot of the farmers in the U.S. are facing the same dilemmas we did. We never really got a spring rally, didn't get nearly as much new crop price as I wanted to. So what am I going to do? What's interesting is, as we get that selling pressure out of our system, gradually, and this happens every year, gradually you start getting farmers less and less willing to sell. And that's when you can get rallies, and that's when you can flip the speculators into a buy. So I'm not short term, next couple weeks. More than anything, it's a coin toss, but I'm a little biased towards it being heavy markets. I don't think you should write off a harvest or post-harvest rally, and maybe even a fairly significant one. And we got it last year, and a lot of farmers are going to have the decision, maybe I should just dump the corn and buy something on paper, and that can add pretty significant buying pressure to markets. And we just need to flip, the switch, flip the direction, get speculators hit and buy instead of sell, and we can get markets to move. I just don't know that it'll happen until we work quite a bit of this selling pressure out of our system. So wish I had better news. It is what it is for now. Have a great rest of your week. And I hope your crop looks good.